Hey guys, in this video we are going to look at how to take full advantage of these volatile conditions. Stay tuned. Hey traders, very warm welcome to you. Thank you for joining me. Alright, so I've done a video that's already up on the channel. We talked about, hey listen, if you want to step aside during these volatile conditions, the time I'm filming this, we're right in the thick of the coronavirus, a crisis for want of a better word, but volatility, probably a better description. There's a lot of volatility. All markets are moving. I don't think there's any market that's not moving. So if you're an FX trader, if you're a commodities trader, indices, stocks, everything is moving. So I did a video and I said, hey, there's no problem in not making money or even not trading in these environments. And I was very clear, guys, and a lot of good feedback from that as well, and that's much appreciated, that hey, if this is too much, there's no problem with it. At the end of the year, nobody looks and cares and sees your bottom line and goes, oh, did you make that in coronavirus time? Well, if you didn't, it doesn't matter. You know, if you have to pause your process and your business now, your trading business, and come back when things are more in tune with the skill set that you've got and the environment you're used to trading, then you do that. Okay, there's no problem with that at all. No one should be feel like they should be obliged to trade and feel they're any less of a trader because they're not taking advantage of this environment. So I want to make that clear. Having said that, let's talk now about how to actually take advantage. So if you've made the conscious decision to get involved and it's working for you and you're doing well, how can you press that edge even more to extract as much profit as possible from the volatility? So let's have a look. All right, guys. So number one, more size on your best risk reward ratio plays. There are so many plays out there that the way to really extract as much juice as you can from them is when you get the play that's got the right setup, that's got the right quantified risk, you frame the risk, you frame the reward, and it's a good risk reward ratio play. That's the one you go a little bit more aggressive on. Now, just be clear here, I don't mean more size as in more quantity than you'd normally do, more size based on the volatility. So you've still got to measure your size based on the volatility. So very likely not trading the same size that you were months ago because the volatility is almost tenfold higher. So it wouldn't make sense. But the current size you're trading, increase that on your best risk reward ratio plays. As long as you accept the risk that comes with that, of course, we understand it. Hopefully, we're all big boys and girls here. But those are the times when you get those good risk reward ratio plays. There's plenty, guys, of 10 to 1s and even more out there at the moment if you look for them. You don't need to be as scrappy as maybe we have been months ago when you're kind of happy with a 2 to 1, 3 to 1, that kind of thing. You know, it depends on the market you're trading, of course, depends on the strategy you're trading, of course, depends on stuff. But all right, stricter with your risk reward ratio. I covered that, making sure that you're looking for the very, very best plays. There's no real point in taking trades that have such a low risk reward ratio because there'll be another one literally 10 minutes later, an hour later, another day later. You don't have to be concerned about missing things. You just have to be very, very specific about what you're looking for. Adding to winners, big one. This helps the bottom line hugely, guys, because you have a situation now where once markets start to move, they tend to move very quickly and very far, relatively speaking. You have the opportunity to get aggressive with that trade and add to the winner into the momentum. So let's say you take a momentum ignition setup, you frame the risk, you take the trade, you put your stop in, the market goes in your favor, you add to the position as it goes in your favor. Now, that might seem extra aggressive, and it is, and of course, the downside to that is if the market comes back, you've actually moved your average entry up, so you haven't got much wiggle room. But the upside is you're in the very, very best explosive momentum plays with the most size, and you can scale up, scale up, scale up, scale up. Now, be careful, be cautious as in every trading, guys. I don't need to say that, but be very cautious because markets can snap back very quickly. So you must be very, very strict with your risk on this. However, if you get on the end of one that just starts that ignition, you get in it, it starts to drive, you're adding carefully and in a structured way, not just blindly. You can be on a very decent sized trade that really starts to squeeze. Either we're talking about the upside or downside, depending on what the environment is, of course, that you're really in the maximum size on the very best plays. So consider that, because we are in an environment where things will run much further to both sides, downsides, upsides, and conditions are changing day by day, but they'll run much further than we expect. And so if we're on board it makes sense to be on the best possible size possible. Just the flip side, I did do a video about this, and hopefully you guys have seen it, where we talked about something to be careful of, and definitely be careful of scaling into trades that are going against you, because again, this market is going much further than many people anticipate, and much further than normal would suggest, and so it can catch you out if you're not careful. But adding to the trade is a really good way of extracting as much from it. All right, being quick to ride fresh momentum. So this, again, along the lines of that momentum ignition type plays, a setup and strategy. It's not what it's about. You put your own strategies, the way you trade, that's fine. However, what you got to watch out for is that when we have fresh news flow, because it's a very news flow driven environment at the moment, or fresh momentum maybe from stale news flow that's just starting to be reacted to or reacted to immediately, then if you're quick to ride that momentum, then there's opportunity there, because there's a lot of people who are reacting to the same news flow in the same way, whereas months ago they may be more structured and have a lot. Now it's basically, okay, what comes out now could affect where price could be in the 6 months. All of a sudden we're in this bizarre situation where, you know, one decision by the government or one decision by a company could impact its profitability for the next year. And so, you know, that dramatically changes the asset value. So if you can jump on fresh momentum as it starts, of course, keeping that protection, there is an edge there in doing so. Right, the other thing is understanding price versus sentiment and trading around it. So we have a situation where price may well react in an unusual way to good news or bad news. Call this expected response and expected response, but you know, we have to see how price is reacting, because it's giving us a really good insight into kind of the feeling of the market. So understanding price and sentiment. What's the sentiment? How's price reacting to sentiment? And when you get a grasp of that, and when you really understand what's happening there, you've got such a good edge that you can trade around that. Because while everyone is saying, oh yes, this is the great news and this and that and the other, and you recognize, hey, the sentiment's so poor still, this is actually not going to trade well, and then trading around it accordingly, you know, you're going to make profit. I'm just going back to thinking in my head back to a gold trade I did not long ago. And everyone's buying gold, everyone's buying, and if gold is going down, to me, that is the biggest red flag ever. I'm out of the trade now, so not saying do this or don't do this, but in this trade, shorting gold, and it's the illogical trade, right? This is the example, it's the illogical trade, because the market's in panic mode back then. Panic, limit down, circuit breakers, you name it. Gold should be absolutely ripping, and it's not. It's down a little bit. Well, why? It shouldn't be. You know, confusion, you can see people's confusion. To me, that's the perfect price v sentiment trade. It's like, hey, this should be doing this, but it's not. If it can't do this under these circumstances, it's going to fall through the floor. That's the thesis. Happened to work out nicely. Good trade. Not going to hang around in it. No longer thesis, but hey, that's the sort of thing you're looking at. And then it might shift the other way around. We might get to a point now, we've started to a little bit today, but hey, when you're watching this, things could change massively, so let's not talk too topical. But then we start to see good news and we start to see a bid coming into stocks, or we start to see a bid coming into certain asset classes that you're watching. And then you think, okay, well, maybe sentiment has shifted. Is it short-term shift? Is it a longer-term shift? And then you look for the next bit of good news or bad news and how the market responds to that. And ultimately, if we kind of rewind back to the, you know, the heady heights of the bull market when Dow was nearly 30K, you could see that, you know, bad news was shrugged off quickly and we'd march back up to highs. And that was giving you a true feeling of the sentiment, underlying sentiment of the market. Now flip that on its head now, and the past week or so, we've just had good news that has just been battered. Slightly changed today, like I say, but who knows? Battered. And that's just the equity market. So you can look at that in the market you trade. So your interest rates are being cut, or this or that, the other. You're looking at your asset that you're trading, the currency pair you're trading, etc., and understanding how price is responding to what's generally considered bullish news or generally considered bearish news. There's a significant edge in that, guys, as well. But I talk I go into a lot of depth about this, and it's something that I use persistently in my trading, have done for a long time, and the amount of times it's occurring in the current conditions is is huge. You know, this kind of sentiment and price, and it all comes down to the price action. Understanding how those two come together, you know, really gives you the opportunity, guys, to capitalize on what's going on. But anyway, regardless of that, these are some things that I think are really worth doing to take advantage of the volatile environment. It's a good environment to trade. It's great conditions. Like I say, if you don't want to trade it, or if you're not involved in it, that is fine. There is no problem in it. The markets will still be here. There's still going to be plenty of opportunity, plenty of things to get our teeth stuck into. If it's just a little bit too crazy at the moment for your liking, that's perfectly fine. But if you're involved in it, press it when you can, and you've got that edge. Take care, guys. Keep your risk managed. Bye-bye.